before, we're only going to risk a maximum of $5 on this. So if the market drops back down to that predicted high that we had there, the 1127, we're going to get out. Or you could stay in until the close of 1124, but that involves somewhat more risk. So by trading only the long side here, we wound up losing some money because the money came back and hit our stop and we're out. So that particular trade didn't work out as well as one might have hoped. But that's the reality of trading. And so I'm sure you're not surprised by the fact that markets can have losing trades as well as winning trades. Come to the next day, again, we are still looking at the long side because all the indicators point that way. But you'll see on this particular day, not much available to trade because we didn't reach either of the buy criteria that we had established. We did not come within $1 of that predicted low, and we also did not exceed the predicted high by enough to establish a position. So that's kind of a no trade type of a day. But we are still in a situation here. All the indicators still pretty much point to the long side, so we should be trading from the long side. We come into the next day, we have our predicted index, we have our kind of a little bit of a situation right here with the predicted differences are still pointing up, not so much, but they're still pointing up. So respecting our strategy that we have set up, we should be looking at trading the long side. We want to, again, if we can, trade right here at this predicted low, +1, the predicted low in this particular case. Theoretically, we would like to be able to buy there on a limit order. The predicted low was 1119 +1, so that would put the buy at 1120, a limit order to buy at 1120. On this particular day, this was kind of a horrific day from a day trader standpoint because the market went through that price. And, it was, I don't know, in a matter of moments or even seconds, it just slid through there and totally collapsed. So where you would have gotten in turned out to be a loss unless you had a situation where you had a stop in here, as we talked about before, your $5 stop, and then basically did a stop and reverse. But this was one of those crazy days. An awful lot happened within a few minutes, and so chances are, once being burned, you'd probably be out of this market, kind of looking at it from the sidelines. Now we can't do a candle by candle analysis of all these. You can see as we're going through here, we have some situations here where we don't do so well. Then we come up to a day, we have a situation on this right here, where we are looking at a kind of a weak type of a situation. Market goes down, the predicted high, predicted lows are pointed down, the narrow index is at 0, which is bearish. So we would be trading this market on this particular day on March the 23rd from the short side. And as you can see, we had a predicted high that day of 1107, so we try to fade that. We're going to take $1 away. We're going to sell at 1106. Vicinity right here, and right in there. Okay, 1106, and the predicted low that we have is at 1093. +1, we're going to add to that +1. We're going to then have our order to get out in this particular case at 1094, or just barely above that predicted low by $1. Here we have the situation where it really doesn't matter whether the initial price, again, all of these prices depend upon the data feed that you're getting. It depends a little bit on what is a day. Generally, where I'm at, the central time, the trading day begins at 5 p.m., goes all the way around the clock, ends at 4 p.m. But you need to know what your data service does. You need to know, what availability you have to data, and kind of be aware of that. The fact that this is going to be trading pretty much around the clock. So it's not an easy thing to trade from an intraday standpoint, but in this case it really doesn't matter if it starts, as long as it starts in the middle. if it goes to the high first or to the low first, either way, you're going to be entering the market in whatever position, whatever it tells you to do. And again, your preferred spot is, because of the previous indicators, is to be low. I don't know that this occurred first, but assuming that the predicted high, or the high occurred first during the day, this would give you a chance to close out at that low plus one, the predicted low plus one, and you would then have the would gain $12. You could also kind of hang in there, close, let the market do its thing, and close at 1104, where it would close out your position on the close. It all depends on how you want to trade this, but that's the potential strategy where you have it, where it works nicely, stays within the confines of the boundary set up by the predicted high and the predicted low. We're going to kind of skip ahead a little bit because we don't have a lot of time to cover every single one of these candles here. We're going to jump ahead to, let's go on to this candle about right in here, where we have a candle for March 30th, I believe that date is, and that indicates, as you can see by the indicators, that we have kind of a mixed bag, but we do have the situation where we have the predicted differences go up. We have the predicted neural index at 1. We have the moving average, a predicted moving average is moving up. So we have enough evidence that the market is headed to the upside that we're going to be trading from the long side. We have a couple of things that would suggest that we not do that. It kind of mitigates it. For example, our predicted low for the next day, when we look at that, it shows that the market's predicted low will be lower than the previous day. The predicted high is lower than the previous day. So there are some negative signs in there, but when you look at the evidence over the period of time, you're going to be trading pretty much from the long side. When you do that, we're going to be looking at the March 31st candle. That's the one that we're trading based upon the clues that we got from the March 30 candle. We have a predicted low of 1101.50, which is about right in there, and that means that we would be buying at 1102.50. This particular case, that was very close to the low. The low for that day was